Welcome, everybody. Welcome to Friday. Excited for the live stream today. As always, we have a lot to talk about, and it's going to be, the market's always an interesting place. Hope everybody is getting set for the holidays, and you're not doing like me, which is to wait until the last minute to get everything squared away. Last minute shopping is a pretty consistent theme for my wife and I, but that's our own problem. So something we have to figure out. In any event, I am looking forward to our session today. As always, there's a lot going on in the market, and that means that there's always plenty of things to try to think about and to analyze, especially as it relates to the open positions that we have. We've been placing through the Rebel Income system. Really quickly, for those of you maybe who aren't on the live stream, but maybe tuning in after the fact, and that might be a little bit new to Rebel Income, I just want to take a couple of minutes and talk really quickly about how to get to all of the information that you have access to. I try to make sure to provide new content for you every single day on the Discord server. And so if you aren't checking that every day, then I certainly recommend that you should. The channel that I'm on right now is the live webinar. This is where you will see me post the link to this live stream each Thursday. I try to make sure to do that the day before the event so that you have plenty of advance notice. This is a link I have to generate new each week. I can't just set up a recurring link as some webinar softwares allow you to do. With the live stream, this is something that I have to do fresh each time. So I post these the day before here in the live webinar channel. Excuse me. Under the Rebel Income System heading is really where you're going to see all of the main content that I provide on a daily basis, just in each of the different channels that we have. The reports channel, this is an area where about 3 times a week I publish reports about stocks that I'm watching. They're in my watch list and may or may not find their way into our weekly trades. But I will publish here a full PDF report of my analysis of that stock using the same criteria that I use for my Rebel Income trades to determine the fundamental strength as well as the overall value proposition of that stock. You will find the weekly trade alerts in the trade alerts channel, and I try to make this really easy for you by posting all 3 of the different trading alternatives you can work with right in the thread. So you can see for this week, for example, the trading alert was on Huntsman Corporation. I posted the put sale first, followed by a covered call, and then the bull put spread was after that. So you can choose the one that you want. If you want to go into more detail about the specific company and the reasons that I've chosen it for this week's trade, then you can just go ahead and open that PDF for that specific article. Thursday is a day that I like to try to post additional content just about the Rebel Income System in general, the way that I've built it, some of the different elements that I've that come to play in that system, and try to do a deeper dive into how those different elements work. And so you'll see those discussions and those articles on Thursday. And then, as I mentioned, on Friday is when we have the live stream. After this is done, I will also take the same link for this live stream. I'll post it under recordings so you can get to each weekly live stream after the fact. These are all stored on the YouTube servers, and we have access to all of them on a continuing basis. So you can revisit anything that we've discussed through that channel. The early access channel, this is another one that I've set up mostly as an opportunity just to say thank you for being part of the Rebel Income community, and you have access through this channel. You have early access to every new video that I post on YouTube. I make these available for free to everybody else, but the day before I do that. I publish them. I make them available for the Rebel Income community exclusively. And so this is just my way of trying to say thank you for being part of our community and tell you how much I appreciate being able to work with you. You can also use the open discussion area if you want to reach out to me or simply engage with the community about some of the different stocks that maybe you're looking at, things that we're talking about in terms of some of the trades that I post, whatever you have here that you would be interested in posting. This is an open area where you can do that. It's also a good place to reach out to me if you have any questions, as I watch that on a continuous basis. You can also message me directly in Discord as well if you have any questions or concerns. Okay, that is Discord, and this is an area that I'm excited to be using this platform as a way to make information available very easily for each of you as members. That said, it is, as always, Friday, and that means there are there are options that are set to expire this week. It's the first week of December, and it's been kind of an interesting week, hasn't it? By the way, just one last comment for housekeeping purposes. If you want to engage with me, if you want to ask a question or offer an opinion, a perspective about something that we're talking about in this live stream, please go ahead and use the chat. I've posted a message in there already, just to kind of let you know where that is. But you should be able to post there. I'll be watching that throughout the live stream as well, and hope to be able to use your comments, questions to feed into the live stream as well, and keep things interesting. Your comments and your perspective certainly add a lot of flavor to what we're trying to do here. So, with that said, there's only one trade right now that is scheduled for expiration today. We have lots of them on deck for the weeks ahead, pretty much mostly for 12/20 for the 20th of December. At this stage, that's kind of the way that things have been falling lately. But we'll take a look here at Comcast here in a minute. This is the trade that is set for expiration today, the put sell. We also have a covered call position on Devon, so it'll be interesting to check in on both of those. Barry, thank you. He says, I hope you had a great Thanksgiving holiday weekend. Certainly hope the same for everybody as well. And we're able to enjoy spending time with your family. We skipped last Friday's live stream as a result. And even though it was kind of nice to take a little bit of a break, I'll be honest, I kind of missed this. This is something that we've been doing either in webinar form or live stream for the better part of the last 5 or 6 years, and it's kind of a habit. I'm used to it, and it's part of my week that I really look forward to. So I did miss it, and I'm glad to be back here again. Thank you, Barry. I appreciate that comment. All right, so let's go ahead and take a look at Comcast. This is a stock that I've worked with in the past on a few additional trades, and it's worked out pretty well. The most recent one was this put sell that I placed on November 13th, selling the $44 strike price, bringing in about 1.68% for roughly a 3-week trade. So let's go ahead and take a look here at where that stock is at. As of the moment, it's just a little bit below $43. Now, when I placed this trade, it was up in this range, right around here. So we've been watching it trace back a little bit to hit a low at around probably, what is this, about 42.50. And it's just kind of been hovering for the last several days. And so having sold the $44 strike price, that means that all things being equal, if the stock doesn't pick up about $1 of momentum in the next few hours, then it looks like I'm going to be assigned the stock. And that's something that I'm actually okay with. I kind of expected at this point. It is possible the stock will push above 43 before the end of the session, but it seems unlikely based on what the stock has been doing so far today. Its high point for the day is just a little bit above 43, so it would need to pick up quite a bit of momentum to push above 44. Now, this is, as always, something that begs the question, if you are looking at an assignment, anytime, remember when we're talking about put selling with American style options, and that's going to be the case 99% of the time, if not more, with the options that we work with, just because we're working off of American exchanges. American style options mean that anytime the stock drops below the strike price that you've sold, you could be assigned the shares of that stock. That's the big reason that I always say that if you're not willing to accept assignment, or if you don't actually want to hold shares in the stock that I'm highlighting a trade on, you probably shouldn't make the trade. There are some exceptions, of course, if you're trying to be a little bit more active about rolling a trade, some of those kinds of things. In any event, if you see a stock below the strike price that you have sold, it should automatically trigger a question, and that is whether or not the stock has moved so far that you need to change your approach. Does it make sense, possibly, to buy the option back from the market and that way remove the potential obligation associated with that assignment, with that put sale? Remember, anytime you are an option seller, you are selling somebody else the right to exercise that option on you. And in the case of a put sale, that means that you're giving somebody else the right to buy the stock at the current price and then sell it to you at the contract price of the put option that you sold. So I sold the $44 strike price, and that means that when I am assigned, somebody else is going to be buying the stock at the current market price or has bought it lower, and they're going to force me to sell the stock. Sorry, that was the wrong area I wanted to highlight. I'm going to have to buy the stock at 44. It doesn't matter how far below 44 the stock is. This is one of the reasons a lot of people are kind of afraid of put sales, and they see this as being a really risky strategy, is because the stock could be at 40, could be at 36, could be at 30, 20, etc. If I have sold 44, I'm going to buy it at 44, and I'm going to be on the hook for whatever the difference is between those two strike prices. That sounds scary, I know, but that's one of the reasons that I always come back to the question of what are the company's fundamentals? Is the company on solid footing? Is their business growing? Sometimes a stock's price and its trend just simply doesn't reflect the overall strength of the business of the company itself. And if that's the case, for example, in Comcast, then taking a put sell may not be such a bad thing. I like to think of put selling as a gateway to stock ownership because I don't avoid these assignments. In the case of Comcast, I certainly expect to be. But if you are of a mindset that you don't want to be assigned, then that triggers the next question, which is, how do I go ahead and remove that obligation? Well, right now we could buy the stock back, or buy the put option back, at the asking price of the $44 strike price. So right now that's $1.15. That means that I'm going to have to eat the difference between whatever the asking price is and the price that I sold the put option for. Let me just double check my numbers. I think it was 74 cents is what I brought in on this put sale. Yes, 74 cents. So if I for whatever reason don't want to own these shares, I have until the market closes today, right now, technically. Well, I should say potentially. Technically, I could be assigned at any point up to the end of the day. If I haven't done anything by the end of the day and it is still below 44, I will be assigned. But let's just go ahead and say that I haven't yet assume that you haven't been yet. And so I could buy it back at 115, which is the current asking price. And then the total amount lost, whoops, I did a divide instead of subtract. Sorry about that. $1.15 minus 0.74. I would absorb a loss of 41 cents per share. I sold one contract on this trade, so that would mean a total loss of $41 on the net position. Doesn't sound great, but it's also a good way to try to minimize loss if you're concerned about additional downside in the stock. I try to mitigate some of the concern about that for myself, mind you. I'm not saying that this works for everybody else, but one of the ways I minimize that concern is by what the company pays in terms of its quarterly dividend. This is one of the reasons dividends are such an important part of the system for me. In the case of Comcast, we're looking at a dividend of a little under 3% at the stock's current price. That's not huge, but it's adequate. A little bit below the average for the S&P 500. But what that does is that gives me a little bit of a buffer to work with, and certainly a passive income stream once I own those shares. The other reason that, and feel free if you have a different analysis here or a different opinion, if you have better numbers than I have on this so far, certainly feel free to share those. One of the things that is interesting, the stock has been dropping off of this pivot high that occurred in October, a little bit above $45. So it's been tapering back since then, creating a bit of a short-term downward trend, but it's also been holding pretty clearly support at about 43.50. Sorry, 42.50 is what I should say. And that's been pretty consistent. We can see here was a pivot high at that price. Here's a, sorry, I'll do PH. Here's a pivot low. Here's a pivot low. And here's another one. So multiple instances where it's been holding pretty solid support down here at about 42.50. Even though that is still below the $43 strike price that I sold, that's an encouraging sign to me that says that there's probably limited downside here, and the longer term upward trend, which has been in place since July, should at some point reassert itself. And we have that supported by the fact that the long-term trend, this is the 200-day moving average, is my blue line, which is a good representation of a stock's long-term trend. 200-day moving average. That's a good indication that the long-term trend has begun to shift and started to move upward. And so all of these are actually pretty bullish indications right now. And so that's another reason that I'm really not too afraid of taking the assignment here. Now, all of that said, it is absolutely possible that all of those bullish signs could break down. And after taking the assignment, the stock could absolutely drop well below the support level that I'm talking so much about right now. That happens. Sometimes it's happened even recently. LRCX is a really good recent example of a stock that did that for us. So sometimes that happens, and that's why you have to be willing to take the time to decide if the stock that you're looking at that you may be taking an assignment on, does that fit into your overall investing preferences and goals? Does it fit into what you would consider to be a company that you would be willing to hold as kind of a legacy position? It's one of the terms that we use here quite a lot. This is one that I like this stock quite a bit, and I'm not trying to beat any kind of advertising drum for NBC or anything like that, or Xfinity, But this is a company that does a lot of different things. They do them all pretty well, and the value proposition for Comcast is certainly well above the $44 strike price that I sold. So I'm not too afraid of being assigned here at this price and letting this play out. It's very possible, if this support continues to hold, that even after taking an assignment today, I may have an opportunity to sell a covered call on this as soon as next week, which would actually be really great. So, Barry, thank you. Even though it is not a Rebel income eligible, doesn't pay dividends, he has a 750 call on AUR that expires 12/20. Started taking off, but my cost basis is 364 and brought in a 30-cent premium. First of all, congratulations on the great trade. If it's, take a look here really quick, Aurora Innovation. Wow. If you're in on it at 364, then yeah, you're doing really well. And, you may not get called out today necessarily on this one, $7.99. But look at that, just the last couple of days. Is this a meme stock? I'm teasing. That's actually a really impressive rally. This is not the kind of thing that I would bank on. This is certainly a terrific momentum play, right? And so this is a great trade for you, Barry. I applaud you for it. And you got into it. Good heavens, 364. So I'm guessing you probably bought somewhere here in August, or possibly even before that. Brought in 30 cents premium on the 750 call. I mean, that's a little under 10% compared to what you paid for the stock, right? In terms of covered call premium. So that's a nice trade. And Barry, if you do get called out of that, you're booking a really, really healthy gain in terms of the total profit between the price you bought the stock at and where you sold your covered call at 750. So no reason to feel bad about that. I like it. All right. So really quickly, just go back to Comcast on this one. So as things stand, as always, my normal MO here is to let this play out, see what happens on expiration date at the close, and if I am assigned, I can't. That's fine with me. If you want to, it's interesting. Just in the last few minutes since we've been talking, the asking price has dropped from $1.15 to $1.04, so you could do a little bit better there. Let's see what the overall activity on this one is like. Not a ton of open interest or volume, but enough. And again, if you really weren't trying to monkey around too much on this, you could probably you would probably get filled right away if you just went ahead and took the listed asking price and moved on. And that's an okay thing. So we'll see what happens with Comcast, where it goes. Does look like, as I mentioned, I'll be taking an assignment, and that's perfectly okay. I'm comfortable with that. This is a very conservative position for me. As I mentioned earlier, I only sold one contract on this, so I'm on the hook for 100 shares at the $44 strike price. That's $4,400 is the total obligation that I have to buy the stock at that price. And relative to the rest of the account, that's a pretty conservative overall position. So, okay. The other trade that is that's due for today, on deck for today, I should say, is a covered call on Devon Energy. This is a stock that I took an assignment on at the beginning of November from a really nice put sale, 9-day trade there that I brought in about $1.67 for. Got assigned at $39.50, brought in 66 cents at that time. And the covered call trade was also pretty nice, bringing in about 1.77% for 3 weeks. Thank you, Barry. There's a really nice comment. Just wanted to let you know I'm in a few services. But your method has been more steady and profitable this year. Just letting you know your work is fruitful. That's that means a lot to me. I really appreciate that feedback. Steady. I love that. I actually love that word as an investor. Um, there's a lot of other places where steady is generally a good thing, but you might wish for something uh, a little bit more dynamic. But when it comes to investing, I have learned slow and steady is a good thing. And when you can apply the same method again and again and again, you can repeat it. That's the big thing. Is a successful trade repeatable? Was it something that you were able to set up? You can do it again and again. If you can, then you have a system that becomes in the long term pretty useful, pretty and very profitable. And thank you. You're observing the same thing that I've observed from my own experience, and that is the reason that value based, fundamentally oriented put selling is really the only way I'm interested in investing in the market at this point in my life. I could talk all you want about momentum strategies, Bitcoin, cryptocurrency, all the other sexy things, foreign exchange, etc. This is the thing that makes the most sense to me. It's fits within my lifestyle, allows me to take care of the other things that I want to do, that I need to do to take care of my family. So I really appreciate that. I only use the other services some because I paid for them to make my fees back. Sure. And again, it's not a criticism of other methods, right? Of other systems. The truth is, you can do very well with just about any investing system if you can find the proper way to systematize it. And that is the question to me. It's not necessarily is one system better than another. It is how well can you systematize it for yourself. I've told this story before, but a long time ago, I have a very good friend who paid off all of his debts in a very short period of time, and was able to live entirely off of investing income using using day trading strategies in foreign exchange and excuse me, and in the futures market. I was so impressed by what he did that I asked him to teach me what he was doing. And so he did. He was very nice about it. He showed me everything that he was doing, soup to nuts. He didn't hold anything back. Every question I had, he answered for me. So I was able to see exactly how he was implementing this system so effectively for him. He outlined every single one of his trading rules, and I started trying to do the same thing. For a little while, it worked out really well. I started with a very small amount, a couple of $1,000s, and in a very short order, I had doubled it. So I thought, boy, I'm on my way. I'm going to keep doing this, and I'm just going to keep doing the same thing, and eventually, I'm going to be able to walk away from everything else and just trade for a living. The problem was that not too long after that, the system started to work against me. I started to play some losing trades. Now, I had seen him place losing trades before. It wasn't that he was winning every single time, but he was also managing very, very carefully through those losing trades. As I started going through my own sequence of losing trades, my ability to think correctly about the system and the way that I needed to try to minimize those losing trades and get through them to the next set of winners, it broke down. And I ended up actually giving back the entire amount that I had, not only that I had made, not only the double my money that I had, all the profits, but I ended up giving back even the small amount of money that I put in, a couple $1,000s to open that account. So I went from a few $1,000s to zero. That was kind of tough. I shook it off, looked at what I had done, thought that I had identified some of the weak points in my method, and convinced my wife to let me use another couple $1,000 to set it to go back in and try again. And again, after about a month, I had done pretty well, just about doubled the account again. Yeah, Barry, I'm also doing okay just buying and holding some closed-end funds that are really not for trading. And there are some of those. Yeah, there are some of those too, and that's fine. And again, if those fit into your preferences, that's great. Going back to my story, though, I actually ended up doing exactly the same thing I had done before. After about doubling my money, I started hitting another losing streak and didn't manage it the way that I was supposed to. Even though I told myself I was going to, I had figured out what I had done wrong. I did it again, and I wiped out that account again. And at that point, I realized that there is something about the emotion of trading that we have to be able to recognize. And there's one thing about what you should do. There's another thing about what you're able to. Sorry, this is the one that I need. Left side. There's another thing that you need to be able to follow through on. It's not just about what you know. It's also about what you're able to handle emotionally. And in those situations, I realized that when those losing streaks hit, I had such a hard time disconnecting my emotion from the loss that I stayed in way too long. And I was doing it again and again and again. Now, I could have kept trying to beat my head against the door and say, I'm going to perfect this. I'm going to do it. I'm going to do it. Okay, there's something to stick-to-itiveness, I guess. I chose instead to recognize that as my own, as a personal failing, and to say, you know what, that is a great market for my friend. It works really well for him. I have a problem managing my emotions correctly with those kinds of trades. And it's easier for me to go ahead and focus on the things that focus on other strategies and methods, specifically put selling, value-based income generation using fundamental analysis, everything that I'm doing with Rebel Income now. So I don't dismiss those trading strategies at all. They're great, and I know people that make a lot of money doing them, and they're doing really well. And congratulations, I love you for it. Speaking for myself, I know what works for me, what I can manage, what and what I can't. And so it doesn't mean I close myself off to new opportunities or the chance to learn something new, but it does mean that I am very aware of what my limitations are and where my strengths are. My strengths lie here. So, okay, that's a little bit of a soapbox. I apologize for that, but let's go ahead and move on. Barry, again, Maxi started paying 15 cents per share in dividends, has increased to $2 because of the recent rise in Bitcoin. It is volatile because it measures Bitcoin activity. Okay, well, let's go ahead and take a look here, and I appreciate these. Really quickly, let me just, open my coward's door over here and say this is not a recommendation to buy or sell any specific security. These are all for educational purposes, entertainment purposes only. But this is one of the things I appreciate you sharing this with us, Barry, because this is one of the ways that not only am I able to expand my view of some of the different possibilities out there, is to get some of the some ideas from the things that you're paying attention to, but this is also how we broaden the discussion beyond simply the universe that you're seeing me write about in my trades. So this is simplified Bitcoin strategy plus income ETF. This is an exchange traded fund. So this is effectively a stock that is going to move. Barry, you can correct me here, but based on what I'm seeing, looks like this is going to move a lot in in correlation to the movement of Bitcoin, which has been rallying quite a bit lately. I know it hit $100,000, which is an important emotional benchmark for that particular vehicle. Recently, has come off of it a little bit. So this is an ETF that is going to mirror that kind of movement, and does pay a dividend, $2 per quarter. Wow. Yeah, dividend yield of 33%. So looks like that has the potential to be a little bit. Let me look back at the pattern though. Monthly. Yeah, excuse me, not every quarter, monthly. You're right. There's 15. Okay. So they've been increasing the dividend. They just increased it from $1. They doubled it from $1. The increase to $1 was from 15 cents. So that's pretty interesting. Your cost basis, Barry, is at $30. So this is one. The only thing I can say about this one is that dividend yield is really, really impressive. And that sounds obvious, right? And yeah, depending on when you bought in at 30 and how many dividends you've brought in, your cost basis would be a lot lower, right? Because that's monthly income that you're bringing in. That is really impressive. There is absolutely no doubt about it. The one thing that I will say is that that dividend can be very, very variable. It's been impressive not only in the amount that they've been paying out and the way that they've been increasing it over the last year, right? They've been paying the dividend pretty much since the ETF was launched, it looks like. There is some potential there, though, if there's a major correction in Bitcoin, if we see a significant counter market move in the cryptocurrency, that these dividend payouts may be more variable. So that's the only caveat that I would give you. So I'm writing it now, but will probably not be a forever holding, and that's fine. In the meantime, obviously we've got a really nice aggressive upward trend in place. I would be a little bit hesitant about trying to buy in right now just because of how accelerated that upward trend has been since October. It would not surprise me to see it pull back a little bit, possibly back down here into the $28 range. It's already a little bit off of 33, sitting at around 32. So there's probably, I would say, about $3 or $4 of downside here. That would just be a normal part of, the market blowing off steam, right? And so that's something to think about. But yes, that is a very impressive dividend yield at that current price. No, there's no question about it. Yeah, Barry, only buy more if it were to fall lower than your original buy-in price. That said, the dividend yield kind of speaks for itself, and boy, certainly the price movement over the past couple of months does as well. Yeah, to be honest, I can't remember what I was going to draw on the chart. So, I remember, Barry. I know this is what you're looking for. I gave you another check mark earlier. Here's the Bitcoin one. So there you go. Thank you. That's awesome. I really appreciate that. Now the other trades that I have on deck are all set to expire just before Christmas. And so we can certainly take a look at these and see where they stand. First is a put sale on Borg Warner. I sold the 32.50 strike price on this one. And it's falling back the last couple of days, but holding right around the 200-day moving average, which is pretty strong support at 33.75. So that one is looking like it's in a pretty good spot for the time being. And that consolidation range that we have in place right now, it's kind of hovering. Here's 33, and I'm in at 32.50. So, here's the strike price that I sold. If it just continues to hold this trading range, then I'll be okay as far as the put sell goes. If it breaks down a little bit, I get a sign, that's okay too. That doesn't bother me too much. This is another stock I really like. So, we'll see where that one goes, but it's in a pretty good spot as of now. Barry, again, I bought about $500 worth of Bitcoin at the $49,000 range. Don't trust it enough to put a lot of money in it, but had I been able to see the future, I would have bought in a long time ago. There's the coulda, woulda, shoulda, woulda, coulda, shoulda of the world, right? Is boy, if I thought about it and bought it back a little while ago, boy, I'd be in Bitcoin. There we go. And here we are, just a little bit above 100,000. Boy, how nice would it have been, for example, to buy in about 64,000 in October? Darn it. I missed the boat. Okay. Yeah, I did. That's all right. Okay. Covered call on FMC, or be mining it when it was next to nothing. Yes, be one of the early Bitcoin miners, right? 1127 is when I placed this trade, and it is also set for expiration on the 20th. BorgWarner, FMC are two companies. As much as I like them, their options are only available on a monthly basis. They don't have weekly options, and so that does tend to complicate the trade somewhat. But in this case, I was able to bring in about 1.5% for a 3-week trade on that covered call. And that's just extra income on top of anything that may come in during the period from dividends, which is unlikely. We're not going to see anything here since the last dividend was paid in September. So the next ex date is likely to be sometime here at the end of this month. Nothing has been announced. So we'll see. But the stock is currently down here at 56.44, and I sold the 62.50 strike price. So certainly looks like I'll still be holding my shares. I was assigned at 60 in mid-November on this one. But again, this is another company. I like it. I like what their business is about, and this is an interesting stock to be looking at in the material sector, specifically related to agriculture. And so we'll see what happens with that one. Looks like, all things being equal, going to still be holding my shares unless it really rebounds and reverses this latest downward move. So we'll see. All right. This week's trade on Huntsman, and then also a covered call on LRCX are really the only other positions that are on deck. The other thing that I wanted to talk about really quickly, I wanted to go back and talk about last week's trading alert a little bit. So I had set up a trading alert on Medtronic. This is the trade that I posted last Tuesday, and I did not place the trade. One of the things to note, maybe you're in this or not, depending on what you were able to do at the time. But one of the things to keep in mind is when I highlight these trades, in order to avoid the perception of front running, I purposely will post these on Tuesday. I won't place them until Wednesday. So I let a full day pass between the time that the trade is posted versus, excuse me, between the time where the trade is posted versus when I actually place it and try to see what the market is going to do. That's a lot of time, and it gives the market sometimes more than enough time to make a serious move away from the trade that I'm planning. Let's go ahead and take a look at Medtronic really quickly. Now, the put sell that I was thinking about at the time was to sell the $85 put. Stock was about $85.52. And so I was looking at a bid of about $1.43, bringing in about 1.68% for 1 month. This would have been a December week 4 trade. So this is a stock that does offer monthly options, but I was, excuse me, this would have been right around in this area as the stock had rallied, but was really kind of chopping, just kind of going through a lot of chop right here for about a week between roughly 85.50 roughly and maybe about 86.50, very tight range at the time. The next day after I highlighted it, let's see, here's Tuesday the 26th, here's the 27th. It's a little bit higher on the day. The low was around 86. The high was around 87 on that day. By the time I went to go and look for that trade, remember, we're talking about the $85 put. Things had changed enough, even if that chart doesn't look all that impressive, things had changed enough to change the profile of the trade that I wanted to place. So let's go ahead and take a look here. Sometimes we're constrained by the limitations of what is available. And Barry will check in on MGA here in just a minute. Here's December week 4. Here was the 85 at the time. This is the current state here. We can see 209 on the bid, 217 on the ask. Go to contract details on this. The thing that I wanted to highlight, this is actually still pretty consistent with what was happening when I went to actually try to place a trade on this. Very low open interest. This is one of the things that you're going to run into from time to time when you're working with a stock that has a really nice setup, good value proposition, good fundamentals, everything else is in place, but sometimes there are mechanics related to options that are going to work against you. There's not a lot of open interest for these options right now, and we can certainly see not a lot of activity. The last trade for this particular contract was yesterday, in fact. Now, none of that is bad categorically. It just means that sometimes depending on what the stock's price is doing, the trade that you're thinking about may not necessarily become practical anymore, and so you may have to adjust your expectations. At the time, placing a new put sale on this would have meant going a little bit higher on the strike price, and to be honest with you, I didn't want to. Completely subjective. That's not me saying now, looking at the stock now and saying, oh, it's at 84, it dropped down to around 82. So, I'm so smart for not placing that trade. It was just simply that the idea of going up a higher strike price at the time wasn't as attractive. Again, especially when you looked at the fact that there's even less open interest, no volume. That was not going to happen either. And so trade simply didn't work out. Sometimes that's going to happen. It doesn't mean that Medtronic is a bad company or that it's not worth paying attention to and looking for a new trade. Maybe around 83. I don't know. Again, not a recommendation to buy or sell, but here's quite a bit more open interest. There's no volume right now, but if you like, the idea of $1.03, that's about 1.2% for about 3 weeks. If that's, to be honest, that's not high enough for me, which is why I'm not really paying a ton of attention to Medtronic right now. I want to see some of the activity in the stock pick up a little bit, and implied volatility in the options as well accelerate quite a bit as well before I'll be looking for another trade on this. At the time, it looked okay. It didn't work out. So sometimes that happens. Okay. Barry, back from the pipe dreams of Bitcoin. Still in MGA with $45 call expiring 12/20. MGA right in the same vein as Borg Warner. If I remember right, Barry, you're in on this. Okay, 42.50 assignment in September. Thank you. Brought in $1.25 of the $45 call that expires on the 20th of December. It's picking up a little bit of bearish momentum the last couple of days, but I love the way that MGA, for the most part, it's just been tracing right along the 20-day moving average. And even with this current drop, we've got it sitting right at the 200-day moving average. Is it going to be able to use that as support, or maybe come down here a little bit and do another bounce? Maybe. We'll see. But all things being equal, this trade looks pretty good. Yeah. Says it's the second covered call in consecutive months at $1.25. So these are really nice numbers if you run those, right? You brought in $2.50 in premium. That's just income, cash directly to your account, right? Against a $42.50 assignment. Oops, sorry. That's not quite correct because it's divided by 42.50, not 42.40. You brought in almost 6% since being assigned in September. If that doesn't sound like a nice result for anybody, think about that on an annualized basis. That's a little low. That's starting to approach 24%. That's just in terms of premiums generated. So it happens to be sitting around $44.99 on 12/20. Maybe can go with a higher strike for January. Maybe. And even if it's even if it's above 45 at that point, you're still locking in a $2.50 gain on top of the $2.50 you've made in premiums, right? So your return at that point goes to about 12% for a 3-month period of time. Boy, if you got a problem with 12% over 3 months, yeah, got called out, then you're good with it. Absolutely. If you get called out of that, that is a great result. If you don't like 12% in 3 months, let's have another conversation, right? Because that's another fantastic result, and because this is what Barry's given us. Got lots of goodness going on, Barry. That's really awesome. So, thank you. Really appreciate you sharing those results. Okay, got a few minutes left. And let's go ahead and open this up. Pretty much talked about the stocks that I wanted to go over, the positions that I wanted to pay attention to a little bit. If there are some stocks that maybe you as a group are paying attention to that you would like to share with the rest of us and maybe get some other eyes on them, certainly happy to do that. Just go ahead and drop it in the chat. I'm going to take the opportunity to take a drink. So. All right. No problem. We can we can always end it a little bit early, and that's not a problem either. Everybody, I really appreciate your participation today, and again, glad to see you back from the holiday. I hope you had a really good time. I know I did. Uh, Hope you have a great weekend, and the next week is also enjoyable for you. If you have any questions or comments between now and next Friday, please don't hesitate to drop me a line. Either send me an email, rebelincomesystem@gmail.com, or go ahead and message me directly on Discord, and I'll be happy to answer any questions that you have. Do anything I can to be of assistance. Thanks, everybody. Really appreciate your time. Have a great weekend.